Hi everyone, welcome to Dezerv's monthly market update with our co-founder Vaibhav Porwal.
Hi Akriti.
Hi Vaibhav. So a lot has happened since our last monthly market update. The election results are finally out, which led to a frenzy in the market. The GDP data is out. The earnings season is finally over. In fact, even the MPC meeting has taken place. So what do you think is the sentiments of the market right now?
I think a lot has happened over last 1 month. Markets kept swinging between unsustainable optimism and unjustifiable pessimism. And I think a lot of investors would have reacted to that. And that's what we spoke about in our last conversation, that there could potentially be a reaction in the market after the election, and that will give us an opportunity to react in the market. So obviously we reacted in the market and took advantage of correction which took place. In the long term, the only thing which matters is how long you can stay invested in the market. And I think that's what investors should focus on.
Now, what do you think should investors focus on?
So I'll tell you something very interesting, and we spoke a lot about this during our post-election note. In last 25 years, the only thing which has mattered for the market is the way GDP has grown. If you look at the data of the way our GDP has grown and the way markets have delivered returns, there is 95% plus correlation between the two. The GDP has grown up by 15 times, markets have grown up by 16 times. So there is high degree of correlation between the two. So that tells us that the only thing which matters in the long term is how your GDP is going to grow. There are two parts to it: how government is able to influence the GDP growth, and how we are able to capitalize on that by converting that GDP growth in profitability. If transmission of GDP growth happens in corporate profitability, markets will do really well. Net, investors should focus only on one thing, which is GDP growth.
Great, that is a great insight, Vaibhav. Now, how did our flagship equity strategy do during the last 1 month? And what are the actions that we have taken for our investors?
See, as you are aware, for last 3 months, we have been overweight on large cap. We continuously maintained our stance that small cap is a place where we see excessive valuation and we see significant risk building up there. So our portfolio is overweight on large cap, and we have not changed that stance. On the performance front, our flagship equity PMS strategy has delivered good returns. We delivered positive returns and did better than the benchmark. On the fixed income side, we run this PMS strategy. There, we continue to generate high accrual on our portfolio. We have not changed our portfolio stance because we knew that the reaction would be there and that reaction would be short-lived in the market.
So now what are the events that we should look out for in the coming few months?
So going back to my previous point on what impacts the market, the only thing which impacts the market in the long term is GDP growth. So there are few events which are lined up and which can have some impact on the way GDP grows for next year or so. First, we have a budget. Over last 4 or 5 years, the central government's budget allocation to capital expenditure had gone up significantly. And that has propelled the performance of some companies which are operating in capital goods and infra sector. Now, given the composition of this government is likely to change, there could be some reallocation of resources to the consumption side of the economy. So we may see some uplift in the consumption, especially the rural consumption. So we are looking at that very closely. So GDP will continue to grow, but we may see a different part of GDP doing better now. Or maybe some rationalization of growth will be there between the two parts or essential part of GDP, investment and consumption. Second thing is how monsoon is going to play out. We have seen that inflation has been sticky, especially food inflation has been sticky. If monsoon, and it is expected to be above average. In fact, IMD came out with the data that they're expecting it to be 106% of the average. If that were to play out, that will give some leeway to RBI to reduce rates. We heard today from the RBI governor that they still want to hold on to the interest rates because food inflation is still sticky. Hopefully, with good monsoon, we should be able to see some relief there. And if that were to play out, that will give further impetus to the equity market. And third thing that we are looking at closely is how global interest rates move. Global markets also and central banks also have started looking at interest rates We've seen ECB coming out and reducing rates, Bank of Canada coming out and reducing rates. Hopefully that will also start benefiting Indian markets, and that will reverse FI's behavior towards Indian equity market. We've seen FIs moving out money from Indian equity markets. That can reverse, and with that further flow, Indian markets can do even better. Other event that we should watch out for is inclusion of Indian GSEC in global bond index. That flow will also start coming our way from June end onwards, if I am not wrong. Yeah.
Yes, it will.
So all these events which are lined up, which will have impact at two levels. First, how GDP is going to grow for next 12 to 18 months. RBI has shown enough enthusiasm. 7.2% is where they are pegging the growth for the next financial year. And second, the kind of flows that we can expect in the market. If both of these things play out well, then markets will go up further from current levels.
That's great, Vaibhav. There's a lot to look out for definitely in the coming months. So at this junction, we conclude our video to say that yes, we are positive on the equity markets. As investors, we should focus on the real impact of everything. GDP data is one of the most important things to focus on in the coming few months, and its impact on the equity, and just focus on long term.
Absolutely. A word of caution, there are pockets where markets are overvalued. Investors should steer clear of those pockets, especially some momentum stocks and small cap stocks where overvaluation is significant. It's important that investors are mindful of the overvaluation in some of these stocks and look at the value instead of looking at the price.
Great. Thank you so much, Vaibhav, and we shall see you in our next monthly market update.
Pleasure.